Let's talk about Costco. It's a retail giant for sure, a cultural phenomenon, absolutely. But for investors, it's a real paradox. You see, on one hand, you've got this business that is just running like a perfectly tuned machine. But on the other hand, you have a stock price that a lot of people think has already priced in all that perfection, and then some. So what is the real story here? Let's get into it.
I mean, just look at the numbers from the last quarter. They're staggering. We're talking $66 billion in net sales. That's an 8% jump year over year. And membership income shot up 14%. The business is absolutely firing on all cylinders. But this is exactly what creates that paradox for investors. The market is asking, is all this perfection already baked into the stock price? Because if it is, there's not much room left to grow.
And that really leads us to the big question we're trying to figure out today. Is Costco a truly brilliant investment powered by one of the best business models out there, or is it actually a pretty risky bet because of that sky-high valuation? To get to the bottom of that, we have to pop the hood. Okay, first things first. Before we can even talk about the valuation, we have to understand the machine itself. We need to really deconstruct what makes Costco's business model so incredibly powerful and frankly so unique in the entire world of retail.
Here's the key idea you need to grasp to understand Costco. Don't think of it as a store. Think of it as an engine. That annual membership fee you pay, that's the engine itself. It's powerful, it's reliable. And all the merchandise, from the Kirkland signature stuff to those random treasure hunt items, well, that's just the fuel that makes this whole engine spin faster and faster.
In this engine, it operates on what we call a self-reinforcing flywheel. It all starts with the membership fees. Because Costco has that guaranteed cash flow coming in the door, it can afford to cap its profit margins on goods at ridiculously low levels. And of course, those super low prices drive massive sales volume and create this intense customer loyalty, which in turn leads to renewal rates over 90%. And those renewals, they feed right back into the membership fee income, making the whole flywheel spin even faster.
You know, this is the classic flywheel effect in action. You've got all these different parts of the business just feeding each other, creating this cycle of compounding momentum. And once a flywheel like this gets going, it becomes an unstoppable force that's just incredibly difficult for any competitor to slow down.
Now this chart right here, this basically reveals the secret to the entire company. Get this, while almost all of Costco's revenue, like 98% of it, comes from selling used stuff, a mind-boggling 70% of its actual profit comes directly from those membership fees. The merchandise is just the means to an end. The membership, that's the real product.
And that brings us to the single most important thing to remember about their model. When you boil it all down, it's this. Costco isn't really in the business of selling goods for a profit. They're in the business of selling memberships, and they just happen to use low-price goods as the irresistible bait to get you in the door. Okay, so we've established the business is a masterpiece, a work of art. But this is where we get to the really fierce debate happening right now, the one about its stock price. Has the market already accounted for all of this operational genius?
Right now, the market is pretty much split into two camps. You've got the bulls, who are super optimistic, and then you have the bears, who are way more cautious. And honestly, both sides have some pretty compelling arguments. Let's break down what they're each saying.
So the bears are laser-focused on one thing, valuation risk. They're pointing to that high PE multiple, the fact that it trades at a premium to even tech giants like Apple and Amazon, and they're arguing that even the tiniest operational slip-up could cause a major stock correction. The bulls, though, they're looking past that. They're focused on the cash flow. They see expanding margins, incredible efficiency, and a return on equity over 30%, which is almost 3 times the industry average.
Let's just zero in on this number for a second. A price-to-earnings multiple of around 47. Now, to put that in perspective, the historical average for the S&P 500 is closer to 16. This means investors are willing to pay a huge premium, $47 for every single dollar of Costco's earnings. It's a massive vote of confidence, for sure, but it's also the single biggest sticking point for the bears.
So how in the world do we get to such a high valuation? Well, the market's view of Costco has kind of evolved through 3 different phases. Back in phase 1, people bought it for safety. It was seen as a stable bond proxy. Then, in phase 2, the market woke up to the genius of the business model and it became a quality premium stock. But now we are in phase 3, the show-me era. See, stability isn't enough anymore. The market is demanding accelerating returns to justify that nearly 50x PE multiple.
So the pressure is on. But is the Costco model completely invincible?
let's take a look at some of the potential headwinds that could maybe, just maybe, throw a little friction into this otherwise perfect engine.
Because even a machine this well-oiled can face some friction. And there are really three key operational headwinds to keep an eye on. Rising healthcare costs that could squeeze their margins, a little bit of a drift downward in member renewal rates, and of course, the ever-present threat of competition.
And believe me, the competitive landscape is heating up. You've got Sam's Club, which is owned by Walmart, aggressively closing the digital gap. BJ's Wholesale is showing some really strong growth. And then you have Amazon, which is a whole different kind of threat. It competes on pure convenience versus Costco's famous treasure hunt experience that actually gets you into the store. Now, a tiny 10 basis point drop in renewal rates might not sound like a big deal, but it actually points to a really critical challenge. The analysis suggests this little dip is being driven by an influx of younger digital native members who tend to renew at lower rates. And retaining this next generation of shoppers is absolutely crucial for their long-term growth.
And the risks aren't just internal. There are external pressures too. For example, Costco is currently tied up in a lawsuit over tariffs on Chinese goods. Here's the thing. When your merchandise margins are already razor-thin at around 11%, you simply cannot absorb major unexpected tariff costs. It just highlights how vulnerable a global supply chain can be.
All right, so we have a flawless business model, a very expensive stock, and a few potential storm clouds on the horizon. Where does that leave us? What's the final verdict? What should an investor really take away from all this?
After all the financial modeling, all the strategic analysis, all the complicated stuff, everything circles back to the simple, powerful, tangible reality of the Costco membership card. This little piece of plastic is the heart of the entire value proposition for customers and for investors. So the final insight here really comes down to three key points. First, there's a clear trade-off. You're paying a premium price for that sleep well at night certainty of owning a super stable business. Second, that suggests a strategy. If you're a value-focused investor, you might want to wait for a market pullback to get a better entry point. But the third and most important insight is about what you're really buying with Costco stock. You're buying predictability. And that right there is the ultimate takeaway. In a chaotic and volatile market, Costco's most valuable product isn't the $5 rotisserie chicken, it's certainty.
And it seems like the broader market kind of agrees with this nuanced view. The general analyst consensus isn't a screaming strong buy, but a more cautious, moderate buy. And that really reflects that tension between the amazing business on one side and its premium price on the other.
Which leaves us with one final question for you to think about. Is that feeling of certainty, of owning a piece of one of the world's best-run companies, is that worth paying the premium for? The answer to that question really defines whether Costco is the right investment for you.